Welcome back to another episode, Talks with AJ Podcast. I'm your host. Today I have a special guest, Mr. Insurance himself. Allow me to introduce to you to Anthony Lumpkin.
Welcome, guys. Welcome. I'm coming to you guys today to drop some knowledge on you guys regarding life insurance, the importance of it, and why you should be getting this actual type of insurance. Okay, so I'm excited to be here, excited to kind of go forward, and we can kind of talk about insurance. Okay.
For sure. I appreciate that, brother, man. It's been a long time coming.
Yes, sir.
We had discussions and conversations with you coming on the show, man. Mm-hmm. I'm glad to have you here as my guest. I know you're going to drop a lot of knowledge on the people that's probably on the fence about why they should get insurance, right?
Correct.
And what better person to ask the questions to?
Sir. Yes,
you.
Sir. Yes, sir.
The expert.
That's right.
Okay?
All right.
So before we get started, man, let me ask you something. Let me ask you this question, man. What got you into insurance, man? What was it? Did you lose a family member and it left a financial burden on the family?
Yes.
To why you're so passionate about insurance, man?
Got you. I'm glad you brought that point up. When you look at insurance, right? My family members were passing away left and right the past like 7 to 5 years, right? So when you look at that, what are they doing? How do they come up with the money to basically bury them? What they're doing is doing GoFundMe accounts and also doing fish fries. Honestly, as an individual, I thought it was ghetto. You know what I mean? Don't be honest with you. I just thought it was real ghetto. So why can't you just have a actual policy that you pay, and then when someone passes away, guess what? You have insurance to bury them. You understand? So basically, I waited. It was heavy on my heart. God was like, listen, you need to be the one. You need to be the one. I said to myself, I don't want to do it. I sat on the seat, on the bench for 7 years, just waiting, people passing away. And the moment I said, I'm going to be the person to stop the bleeding, that's when that burden was lifted off my chest. And guess what? That's when I got into insurance. So that's ultimately why I got into it, because my family members were passing away, doing GoFundMe accounts and doing actual fish fries, which I thought, again, was ghetto. Yep. So that's why I basically, and how I got into it. So
Got it. You wanted to ask him a question, Jay?
Yeah. For me, I look at it like, being, black, whatever.
Yes.
The insurance is not really our thing. So for you being an expert, where you think we should start at? What kind of insurance and how much, or like, how you think we should go about it?
There is a thing when it comes to finances. You should have a foundation, just like a house, right? What does a house start with when you're building it?
A
foundation. So when it comes to financial literacy, life insurance, you should get some type of life insurance. That's the beginning. So we talk about stocks and bonds and IRAs. We could go all on and on about that. But regular term life insurance or IULs or whole life insurance policies are a way to start. You understand?
What's the difference between those?
Glad you asked. Term life insurance, right? Term has an expiration date. Okay. So when you look at term insurance, it goes from 10 years, 20 years, or 30-year terms. Just like the presidency. I know y'all don't like him, but but he's in term for office for a certain time frame. You understand? So when basically with term, it's basically cheap. I have a $750,000 policy. I'm only paying $60 a month. It's real cheap. But guess what? It does expire. You understand? So just guess what? You go 30 years, it expires, and guess what? You may have some health complications after that. So guess what? You have health complications, it gets more expensive as you have like diabetes, COPD, whatever you may have, it gets expensive. So why not lock in a policy right now and basically have it forever? You lock in that price and you're healthy. So basically what I tell my clients today that I talk to you is the healthiest and the cheapest you're going to have to pay for life insurance. So why not get a term and a whole life? You understand? Then you have traditional whole life. Traditional whole life is like for my grandmother, 75 years old. She wants to, we call it burial expenses in the life insurance industry. So if you want to bury someone, $10, $20, $30, $40,000, that's how much a burial costs, right? In most cases. Right. That's traditional whole. The one I like to do is called IULs.
What's that?
It stands for Index Universal Life Policy. Right? It has 3 components. First component, it has a investment tool tied into it. So what that investment does is it allows you to invest your money. Let's say you're investing $100 into the market. That $100 is being invested into the market at a 6 to 12% compound interest on an annual basis. All right. So it has a floor, right? So let's say if I jump up and down on this floor, am I going to go through it?
No.
All right. So that means your money is locked in. So if the market were to tank, guess what? My money stays there.
Yeah.
So say Al has $100,000 in a Roth IRA. I have $100,000 in mine as well, but I have an IUL. We're both at 10%.
Yeah.
Market go down to 5%. Who's losing money?
Yeah.
Al is.
I'm
My money stays at $100,000.
Yeah.
So that's why I basically like to suggest a IUL. That's the first component. Second component is still life insurance.
Okay.
Even though this is invested into the market, the IUL is still a life insurance. So that $100,000, if someone were to pass away, his kids will get the $100,000 within 48 or 72 hours of his demise. Okay, that's the second component. Third component, it has living benefits. Y'all heard of Aflac?
Yeah.
Deion Sanders, Nick
Sanders,
Saban,
Nick
all that. Aflac, that whole thing. Yeah. So basically, if you have a terminal, chronic, or critical illness, you can borrow the money, right? And I'm gonna give y'all a real live example of what happened to one of my clients.
Okay.
4 months ago, husband and wife passed away. Got in a car accident. Very bad car accident.
Okay.
They were out 3 months in the hospital. They couldn't talk. They couldn't eat. They couldn't do anything.
Wow.
3 weeks, she called me. Hey, Anthony, that life insurance policy that we got, how can we use it? I said, send me the paperwork from the doctors, like stating what you have, what your conditions are.
Yeah.
Sent it in to the carrier, which was Mutual Omaha, is the name of one of the companies. One of the companies. And then at that point, it took 4 days.
Yeah.
And they got approved for up to 80% of the $200,000.
Wow.
So they were able to tap into, since they had a $200,000 policy, $180,000 at that point. So they tapped in and got $40,000 each. So they had $80,000, right?
Yeah.
So at that point, they paid their mortgage down because at the moment they were about to get kicked out of their house.
Yeah.
Because they weren't working, they weren't making no payments, anything like that. So they paid it down. And at that point, she was very happy and said to me, you know what? I thank you. You are a savior. You saved us.
Yeah.
You helped us out. You understand? So in that sense, I helped the family out.
Yeah.
And that does more to me than anything. You know what I mean? Helping the family out just like that. You understand? So those are essentially the 3 components of having an IUL. You understand?
Yeah.
But the bad part about it, guess what? You have to be, it has 3 things that you need to be, make sure that your health is good, right? That's one thing. You can't be unhealthy and get these, because these companies look at these policies, you guys, as what? You're not going to be driving around and having DUIs. You can't have a felony. We're not going to approve you.
Good point.
Okay.
You understand? So those are the things that you need to be aware of. You understand?
Yeah.
They don't want to be reckless. They don't want to just have insurance for anybody that's going to be reckless.
Yeah.
You understand? So in that sense, those are the 3 components, and that's why I highly suggest an IUL.
So let me ask you this.
Yes.
So the IUL, is this similar to the waterfall? Because I remember we spoke about the waterfall.
Yes.
Right. So this is like the Rockefeller.
So there are 2 components that make up the waterfall method. So it's basically Mr. Rockefeller, right?
Okay.
So his whole concept was starting a family generation, right?
Yeah.
By using life insurance. Okay. So some of the people that we could think of that use life insurance to their benefit, Master P. He used his life insurance policy to do what? Help out, start his record label.
Yeah, he did.
You know what I mean?
Limit, yeah.
Walt Disney World. Walt Disney.
Okay. Same
He
thing.
used an IUL to start Walt Disney. I can go on and on and on about the countless individuals that use an IUL to kind of help their family to start something big. You understand? So that's what Rockefeller did. So basically what you do is you get a life insurance policy. Let's just say it's $1 million.
Yeah.
He started his with $1 million, and then what you have is what's called a trust, right? You name the trust, the beneficiary as the trust name, and then basically every family member that comes behind you, you put them on a policy, and then you name the beneficiary in the trust name. So basically every time someone passes away, that money gets redirected right back into the trust, into the market at 6 or 12%. So over the years, that money is compounding,
Interest.
compounding, day in and day out. So my whole concept, right? If your money's not making money for you while you're sleeping, you're gonna be working the rest of your life.
Right.
You're gonna be continually working the rest of your life. You can make $120,000, but if you're saving money, it's not compounding no interest.
Right.
Yeah.
So guess what? You're gonna be working the rest of your life. Yeah. So I tell people, put your money in different vehicles, like a life insurance policy, like an IUL, to help you sustain yourself so you can basically have a retirement. Make sense?
Yeah,
Makes
it
sense.
makes a lot of
So-
sense.
Makes sense.
Yeah.
So what about individuals that's on the fence? They have a 401k and they have a life insurance through the job, but not a personal insurance, right? And you brought up a good point, because when you're 65 or 70, whatever age you decide to retire, you don't have that coverage or that
Correct.
protection, right?
Correct.
So what would you tell an individual, man, that's on the fence?
Do your research, right? We suffer of people because what? Lack of knowledge.
Yeah,
Right.
you're right.
So my whole thing, when I have a conversation with my candidates, my clients, I'm educating you. Do you know what a term life policy is? Do you know what whole life is? Do you know what IUL is? I'm educating you on those things first before I even ask for your paycheck, ask how old you are, ask all these other questions, because I want you to have that mental fortitude to understand, what am I getting myself into? Hey, what is an IUL? You understand? So once I have that conversation with you, okay, you better ground it. You understand what's going on? Let's talk numbers now. That's how much you're going to pay. You understand? So when somebody's on the fence, I would say private insurance is the best type as well, because guess what? When you have your job insurance, you can't take that away, right? You can't take it with you.
Correct.
So you have a job, you have a company car, all that stuff. When you done with that job and they let you go, guess what's going to happen? All that's going to be taken away.
Yeah.
You understand at that moment? So when I say get something outside of your job, you got a job right now, you have a job right now. It's cool to have something with the job. You got a 401k, guess what? You're going to lose money in the 401k. I lost like $80,000 in my Roth when I was working a 9 to 5. You understand? But I had an IUL, and I never lost a dime in that money. You understand?
Yeah.
So when I tell people that, and I'm educating them on this information, you have to take heed to what I'm saying. Don't take my word for it. Do your own research.
Yeah, of course.
You understand?
Yeah.
So study, so yourself approve it. Go ahead.
Yeah, but I can understand why you say that, because of course you have people that's been bamboozled by brokers when it comes to insurance.
Correct.
So I can see why people are on the fence, because I even hear people say, "Oh man, insurance is a scam." I hear those talks. I know you hear it a lot. I know you hear it.
I'm tired of hearing it, to be honest.
I know.
Yeah.
Trust me, I know. And just how you breaking things down, I can tell you're a very passionate person, a very passionate individual.
I am.
And you know what you're talking about. You know your craft.
Correct.
But you did mention something about if any individuals, right, that have a conviction, like a felony, so they cannot apply for this.
Not necessarily.
Okay.
So there are terms, again, and glad you brought that up. I do life insurance, health insurance, legal insurance to set up the trust, and I'm a mobile notary. So if you need something notarized, stuff like that, I help you with that as well. Now, since I'm a broker, I have 30 plus A-rated companies that I have in my back pocket.
Oh, wow.
So what that means is, if you can't get approved for company A, I got company B, C, D, E. It doesn't matter. Yeah. You understand? I can help anybody. People got AIDS, I can help you.
Yeah.
But you're gonna pay a premium higher rate than somebody else that's healthy that doesn't have AIDS. You understand? So I can get a policy for anybody. It's just a matter of fact, how much you willing to pay. You understand? That's kind of the main focus. So when it comes to that, I just want to make sure that you have the policy that you need, and you can kind of move forward with something that fits what your budget is looking like. So.
All right, let me ask you this. So can you borrow from the IUL? And if you can, is there any penalty? Like if I decide, you know what, I want to take out $20,000, $30,000, $40,000 I want to borrow. Okay. Is there a tax penalty?
No, and that's the beautiful thing about the IUL, and that's why my wealthy clients, I have clients that they put in $100,000, $300,000, getting $1 million, $2 million policies, and guess what? They throwing in a lump sum of money. I deal with a lot of realtors. They'd like to do flips. You understand? Yeah. So when they want to do a flip, guess what? They say, "Hey, Lan, I want to pull out $50,000 so I can put down this down payment on this duplex, so I can flip that." So basically, you get the IUL, you pump money into it. That money is accessible right now within a year or two, and guess what? You get to pull that money out, no taxes. That's why the wealthy do it. So like Donald Trump, when they say, "Oh, he ain't paid taxes" or anything like that, those are tax codes, tax loops.
Yeah.
So you use life insurance as a tax loop. You ain't using it because you really need it in most cases. You use it for tax codes.
Yeah.
So you can hide your money. Now, you're not hiding it, but more so you put it into it so you can take money out tax free. Because if you pull from a 401k before 59.5, guess what? You getting taxed on that.
Yep.
You got 10% here, another 10% there. When you basically claim your taxes, that's 20%.
Yeah.
Can you afford to lose 20%?
No, that's a lot.
Can you?
Hell no.
All right. So you put your money in life insurance, you use it as a 401k, pull money out tax free, no penalty. Now, if you pull money from your 401 from your life insurance policy, let's just say you take $50,000 from it, right? And you have $100,000 death benefit. where it's going to be subtracted from your actual death benefit. So now you have what left? 50,000 in your death benefit. Now you paying your monthly payment. That's essentially you paying it back as slowly, right? So if you want to put the lump sum back, you can do that as well. That makes sense?
Yeah.
Of course.
So no taxes. That's why a lot of wealthy get life insurance like an IUL, so they can basically have tax-free money.
Man, I'm glad you brought that up because I'm tired of hearing our folks, us. I'm tired of hearing it. They always complaining about, oh, Donald Trump don't pay taxes.
Yeah.
Doug,
Get
some knowledge and get some games.
So you won't pay taxes.
Yeah,
Correct.
exactly.
So
Get
this
some games.
this is a way that Donald Trump is basically, or people or the wealthy are getting out of
Correct.
paying taxes.
Right. Not just Donald Trump, but
It ain't.
the wealthy.
Listen, I'm doing it.
Right.
Yeah.
Yo, I'm doing it. I took money
Exactly.
out. Listen, I ain't had to pay no taxes. Why? Because it wasn't a loan or anything like that. It was my own loan on my own
Of
money.
course.
You know what I mean? So that's the whole concept behind it.
Right.
So yeah.
Good point, man.
Yeah.
I got a question.
Go ahead, Jay.
Speaking of IUL, I know I heard a little bit about it, but I be hearing people like, yo, you need like 10, 15,000 to start off with and then go. Like, what you need to start off with? What, is there a minimum that you need to start off with? Or
Well, and good question. So when it comes to that, a lot of people, and I suggest you should always start young, right?
Okay.
You guys have kids. I got a 10-year-old, 4-year-old. You essentially starting them off something like paying $50 a month. Over time, they'll probably have, at the age of 18, they'll probably have $300K sitting there. You can use it for whatever, going to college, buying them a car, whatever the case is. It doesn't matter. So when it comes to that, it goes by your age and also your health. You understand? So you're how old?
41.
41. Someone like you,
Yeah.
you get, let's say, a $50,000 policy. The lower your death benefit, the higher your cash value is built, right? In the policy. That's the concept. Okay. The death benefit has the correlation about how much you're going to be paying and how much basically you can kind of, borrow from and everything. You understand? Okay. So that's that actual number. So if you say, hey, I want a $100,000 policy, you probably, if your health is good, again, remember, health and age. If your health is good, you probably pay $100. Now, would you say $100 is a lot of money for a life insurance policy for the bill income? No. And if it be the tax free and take from it?
No.
All right. Why? Why is it not a lot of money?
Because we spend $100 on
groceries,
on food, whatever, gas, like
going to the club or something like that, stuff like that. I ain't saying y'all do that, but just saying.
Yeah, of course.
So that's my point. So it doesn't cost much, and I'm glad you brought that up because that's the misconception. When people hear IUL, they hear, oh, I gotta have 10,000. They hear investment. It's an investment tool. I gotta have a whole lot of money. So I'm glad y'all brought that up. It doesn't cost a lot of money. All you have to do is just have the conversation and know what your threshold is. When I say threshold, how much you can spend on a monthly basis on that. Okay. So good question. Glad you asked that.
So let me ask you this. So what would you say to, because you have some folks, because of course, I come from a Caribbean background, and one thing about Haitians, man, especially the old school Haitians, they don't believe in insurance at all, because they feel like, oh, if you get insurance on me, they're going to do witchcraft and try to kill me, try to unalive me.
Correct.
Like, what would you say to those folks, man?
Listen, you have to honestly look at the bright side. Life insurance really is not for you per se. It's for your family members behind you. You understand? You want to leave a legacy of some sort. You want to help out if something were to happen, and it's an unselfish thing to do. You understand? You pass away. Guess what? You leave behind debt. You got all this other stuff that you have going on. Guess what? Who's taking care of that? Your family, your loved ones. You understand? Now, if your family is rich and all that kind of stuff, they ain't worrying about it. They're going to take care of everything. Yeah. But who's the average family? How many people has money laying around? Hey, John Doe passed away. We got $30,000 laying around.
No.
People got bills. They got kids.
Yeah.
They got other things going on. They can't cough up. Not people putting loans on their house, liens on their house, just to bury somebody. Come on, that's ghetto. Again, I'm gonna go back. It's ghetto. We need to do better. That's it. That's all. We need to do better.
Yeah. Yeah, man. Yeah, hey, man, you really dropping some knowledge on us today, man. Yeah, you know what I'm saying? So whoever come across this video, man, my man done laced you up with a ton of knowledge, man. A ton of knowledge, man.
Now, here's the other thing I want to add as well when it comes to this, right? CNBC did a statistic earlier this month. 49% of people don't have life insurance across the United States.
Wow, that's a lot.
But why is that, though?
Education, one.
Okay.
They think having job insurance is very adequate. Y'all see the quotations, but it's not. It's not adequate insurance. You understand? And then when it comes to retirement, right? The average age for somebody 65 years old in the retirement, guess how much they're spending per year on retirement? Guess. Just give me a guess.
On average?
Yearly, how much they're spending on retirement?
Like 80,000.
I'll say 100,000.
That's high. But with inflation, yeah.
100 grand, 100,000.
That's real high. Go down a little bit on one more answer.
60.
60 grand. That's the number. 60 grand, right? Wow. So would you say that's a lot of money for retirement?
I mean, one person 60,000. Oof.
But here's the thing, though. It's three things that are expensive, right? When it comes to an older person: housing,
correct,
health insurance, and transportation.
Yes.
Yeah.
Those are the things that are costing a lot. You understand? So when it comes to that, I tell people, listen, get yourself in a situation again where you know where your money is going. You know where your money is traveling, right? Mm-hmm. If you don't have a map of where you're retiring or how that's happening, guess what? You don't know where you're going. Yeah. I ask people, listen, you're supposed to have 10 to 12 times your income. Mm-hmm. So you have $100,000, right? And that's what you make. Yeah. 10 to 12, what is that?
Like $1 million?
1.2, 1.5.
Mm-hmm.
And I ask my clients this: are you on that road? I say, hey, client, what do you make a year? Oh, 60. You're 45 or 45, 50 years old. Are you close to that number? I don't even ask them. I say, hey, whatever your yearly income is, do the math. Tell me what it is, what you need for your retirement. They say, oh, I ain't even close. Why? Because you're leaning on your 401k. But guess what? Your 401k is going to do like the stock market. What? Go up and down. So you can't predict where you're going to be at the end of what? 65 or your retirement age. Yeah. But with an IUL, again, I push the IUL because it works and it's basically you know how to predict where that money is. Right. So once I'm having a conversation with my client, I'm showing you guys an illustration. Yeah. Once you put this money in, here's where your money's going to grow, and here's how much you'll have by that age. I'm showing you that. Mm-hmm. I'm not just having a phone conversation. I'm showing you on my screen using Zoom, and you see that. You see the projection. So you can say, you know what? By the time I get my retirement age, I know where my money is.
Okay. So let me ask you this. For a person that's like maybe in their 40s, and they decide, you know what? I want to get an IUL. Mm-hmm. By the time they're 65, 70, how much money you think that individual?
Tolerance, how aggressive you are.
Okay.
How much money you have to fork up for that. Okay. You understand? I just had a client. She did $1 million policy. Yeah. You know what I mean? She's in a situation. She got money to burn. Yeah. She owns her own practice. She's doing her thing. Guess what? She can put $1,000 in. That's a very aggressive, but in her situation, she needs it because guess what? By the time she gets a certain age, year 5 as well, guess what? She'll have $150,000 in 5 years because she's very aggressive. Yeah. Everybody's not going to be on that same totem pole. Yeah, yeah. You understand? Right. So you have to be kind of realistic with those actual numbers. Right. So are you behind? Maybe not. It depends on where your goals are, what you're trying to get to. Good point. In that regard. So yeah.
Let me ask you this, man. Me and you, we kind of touch bases on Social Security, right? You have, you have people that are like, Social Security. They're relying on the Social Security, man. What do you have to say to those folks?
What year we in? 2025.
2025.
We got 10 years.
10 years.
Y'all know what 10 years? When I say that, when I say we got 10 years.
Go ahead.
This is from the Labor Bureau of Statistics. They said in 10 years, Social Security by 2025 going to be depleted. Wow. So if you analyze that, depleted, what does that mean? People depending on what? Social Security as their retirement. Oh, I got my Social Security check. Listen, it's going to be a point in time. It's either going to be depleted or it's going to be halfway gone. So how are you going to fund your retirement? What are you doing now to fund your retirement? And I tell people 20s, 30s, 40s, listen, y'all ain't got that much time. Yeah. You understand? Yeah. You either have time or you have money. Yeah. You understand? But if you got both, it's great.
That's great.
So that's why I say, hey, you put it on your kids, you set your kids up for life. I wish my mom would have set me up. Yeah. I'd have been a trust fund baby, had $1 million. I wouldn't be here right now. Yeah, you understand? So since I know better, I'm going to do better. I'm going to put my kids on them already and put them in a better situation than I was afforded. You understand? So when it comes to that Social Security thing, it's a real thing. Right. I have that inside knowledge because I'm studying this stuff every single day. So I'm worried about, our age right now. People that are not taking it serious. You understand? Because by the time you retire and I retire, guess what? It's going to be gone or it's going to be depleted. You know what I'm saying? And that's a sad thing to look at or to even realize. It scares me, to be honest.
It is.
You understand? Yeah. And the whole thing is people going to be going back to work. Yeah. You're not supposed to retire to go back to work.
Yeah.
We see it
That's
all the
ghetto.
time.
Yeah.
That's ghetto.
We see it all the
Yeah.
time.
Yeah,
Walmart, Home
exactly.
Goods.
Yeah, or the older generation.
Yeah.
Why?
Yeah.
Because they didn't plan.
Yeah.
You know what I'm saying? You don't plan to fail. You don't plan based. You planning to fail.
Yeah, pretty much.
You understand?
pretty
So you set yourself up, put a guideline in place to make sure that you set up for retirement. You're never too young to start retirement. Never too young.
Yeah.
Yeah.
So
Damn. You got any more questions for him, Jay?
Yeah. If like let's say for me, I got 2 boys, they're like 13. What would be the best way to go about it? The IUL, do you get one for yourself and you get one for your kids, or do your kids roll up under?
no, it's like term, and that's the whole thing. And we were talking earlier when the guys, the other population, we know who they are.
Yeah.
Okay.
They set you up the improper way.
Yeah.
But guess what? No, behind North Miami Beach, I'm a wrap me back because I'm gonna go off track right here.
Okay.
North Miami Beach. Who stays over there? Back in that little smaller community.
The mother peoples. I know who you're talking
Yeah,
about.
we know.
We know.
Yeah, we
Okay,
know.
so we ain't
know.
gonna say
Yeah,
that.
yeah,
So
yeah.
they set their kids up, and they have IULs.
Oh, wow.
They have trust funds. They have all that set up. Guess what? And they live nice. They don't spend money on rims and go to the club and just doing it. They don't do that. They smart with their money and they keep it in the community. You understand? So if they're doing it, why can't we do it?
Yeah.
Why can't we do it?
Lack of
That's the
knowledge.
question. Lack of knowledge. And guess what? Ignorance.
Yeah,
That's
that
another
too.
thing. We're ignorant to the fact. I come in and have a conversation with somebody, drop some knowledge. Oh, you know what you're talking about? I'm good. I got it.
Yeah, it's always like that.
What is that? I got it. What is that?
Yeah,
You
yeah, it's
understand?
always like that.
But back to what you were saying about the little one. So with the term policies, those what they were offering, term expires. It doesn't build any cash value whatsoever.
Yeah.
So why are you getting it? You spending your money for 30 years.
Yeah.
Where did it go? Can you get it back?
No.
No, you can't.
Yeah.
You can't. So you have to, with those, you can put different individuals under those policies. So you have your kids, you get a term policy, you can have a rider. A rider is basically an attachment. So if you get a policy, you can put your kids on them. Their policy that's going to have is basically going to be $5,000 if they pass away, something like that. That's what a rider is. You understand?
Yeah.
I don't suggest a rider because after 26 years old of the kid, it falls off. So
Mm.
now they don't have anything. So that's why term for me, it's not good. Is it cheap to have and it's good to have? Better than have anything, right?
Yeah.
To have nothing.
Yeah.
But if you have the money to do so, get an IUL. You understand?
Yeah.
So for something for you have to be on an individual basis. So back to your question. So the kids have to get their individual ones. You have to get your individual policy. You can't. It's not a rider that's attached to it. You have the other riders where the critical, chronicle, and terminal.
Yeah.
That's a rider, but that's the only rider that will be associated with an actual IUL. If that makes sense.
I got you.
Okay.
Okay.
One more question.
Yes.
If like let's say we go through the IUL process, do I have to go through like medical screening, and the kids got to go through medical screening as well?
Boy, you
question.
got the white questions over here. Boy,
know.
you covering all. I'm
Let's-
just going. You
I'm
cover.
shopping.
Okay.
I'm
Okay.
shopping.
All right. Good question. So
Yeah.
there are only two ways to basically go through that whole process, right?
Okay.
The older way is what? Blood and urine samples.
Yeah,
you got to
yeah,
pee in the
yeah,
car,
yeah.
all that kind of stuff.
Yeah,
That's
yeah,
the
yeah.
first original way.
Yeah.
Now we have what's called simplified issue. Y'all say it with me.
Simplified
Simplified issue.
issue.
So basically what that means, they're checking your medical records, right?
Okay.
So let's just say you guys, both of y'all go to the hospital and the doctor say, hey, you know what? Y'all got diabetes now. So you having diabetes goes on your medical records. It's called MIB. That's what it's called.
Yeah.
Your medical records. So just like having a criminal record, but on the medical field. So you go get the diabetes. It goes on your record. Now at this moment, you go through insurance. We're just going to go through your medical records and use your social to check your medical records. So that's how the insurance company check your information. So you can tell me, oh, no, I'm good. I ain't got no diabetes. I ain't even taking the medicine. But you got prescribed the medicine. Even though you're not taking it, it's still on your what? MIB record.
Yeah, yeah.
So you can lie to me and say, I ain't taking it, but your MIB record will tell me one thing. You understand? So that's why typically when I talk to my clients,
Yeah.
I want to go through a free application.
Oh, okay.
Because guess what? I don't know if they lying or not. I don't know you. You might be just putting up the front. So I'm gonna go through the medical. I'm gonna go through the free application where we're gonna check your medical records and we're gonna check your driver's license number. And at that point, I can have an answer in 5 minutes by just doing that right quick. Just name, email address, social security, and driver's license. Once I have that, they'll give me a response right then and there. They either say yes or no.
But let me ask you this.
Yes.
What if an individual that had diabetes and they reverse it?
That's funny. I have a client right now.
Right.
His wife, he has diabetes now. He's going to pay a higher premium.
Of course.
He's going to be paying. He was paying 120. He could have been paying like 60 or 70.
Oh wow.
So basically, you can do the holistic way. So you can reverse it, and we can go back through and do a medical records check, and we can reverse that. So that is a thing you can do.
Okay. Good
So that
point.
is
Because I know the questions was gonna.
Correct.
Right.
Correct.
So that's the reason why I asked you.
You can. So basically, when it comes to that, if you're going through, like, if you have to do if you get the simplified issue, you don't have to go through the check. So we're just using your medical records. You understand? And typically, in most cases, if you get denied, you already got denied before because you got insurance and you did the whole the blood urine samples.
Got it.
So once you do it that way, I don't suggest that way because that's permanently on your record for like I think 7 years.
Okay.
Oh wow.
That makes sense.
Yeah.
That makes
So
sense.
yeah,
That makes
yeah.
sense. So with the IUL, there's no cap. Like there's no cap. Like
Meaning what?
like as far as how much money I like if I want to dump 10 grand, 20 grand, 11 grand.
Okay.
Is there a cap?
Yeah, good question. Now,
Okay.
when the cap was in 401k, it's a cap on that.
Okay.
I think it's 7,500 in certain situations, right?
Right.
That's your cap. Now, would you say that's a lot of money to dump in? Not really, because some people want to dump in much more, which you're alluding to. So, how much you could dump in goes by your death benefit. So, if you have a $1 million client, meaning they have $1 million in death benefit, right? You can dump in almost $60,000 to $70,000 of money. There is no cap.
Okay.
You understand? You could dump it as long as you can pay for it. You could put that much in, and guess what? That super accelerates your policy. And then when it comes to that, you have a monthly payment on your policy.
Yeah.
So with the interest rate being 6 to 12% fluctuating, you can basically what we call is overfund your policy. So overfund your policy is paying your $100 and then overfunding that policy an extra per month per year, however you want to do it. You just call the carrier and say, hey, I want to put in $400 alongside with my money the 100 that you guys are already debiting every single month. So that accelerates your cash value so you can have more money in that account. That's called overfunding your policy. Okay. Now, and then with that, there are specific tax codes called Tamara Pay 7. If you put too much money in, the IRS is going to come knocking on your door and say, hey, you put too much money in.
Seriously?
Yes.
Why?
The reason is because that policy is deemed non-taxable, but you go over the threshold, it's now considered possibly a 401k. So that's why I educate my clients, hey, if you're going to put such much in, let's have the conversation how much you're going to put in. So I have to structure it correctly. So if you're going to say, hey, I'm about to come into some money and I want to be able to put in 10,000, if I put the policy at, let's say, 50,000, and you want to put in more, I set you up for failure. Now IRS going to come knock on your door. Now you got to pay taxes on that.
Oh, wow.
So that's why us having a conversation and really getting into the weeds of things. Hey, how much do you think I'm going to put in? Hey, are you going to have money coming down the road? Having those conversations is very pertinent because if I don't set you up right, I set you up for failure. So that's why that conversation could be an hour too long in some cases. Make sense?
Of course, because of course you have to educate the people.
Correct.
Right.
Yeah.
Right.
Correct.
You have to.
Yeah.
And you know, sometimes people can have a short attention span when it comes to education and knowledge. Man.
Correct. And that's why I use the visuals when I do the Zoom. I show you my screen and I'm showing you different things. Hey, this is your number. Make sure you circle that number. And then once I'm done, I send everything over so you have a breakdown of your policy number, the Tamara Pay 7 number, so you're not confused on what's going on. Hey, what is my number? You understand? So I do that education. So guess what? When you leave there, you're good. And I also do a test at the end of it, right? What the test consists of. Hey, on how much coverage did you get? Right? $100,000. Okay, what's the name of the company? Mutual Omaha, right? Third thing is, what are the 3 components that make up the IUL? Right? This. Living benefits, cash value, life insurance. All right. Then how much you're paying monthly? Oh, $100. All right. Then what's the name of your favorite agent? That's me, Mr. Lumpkin. You understand? So the whole point of that, right, is all centered around education. You understand? This is not just a transaction thing, right? You're gonna be here for life. I'm gonna be your agent for life. You understand? So that's why I'm centered around. Listen, I don't talk numbers. I'm gonna educate you first. That's the very first thing I'm gonna do when we get on the phone. That's the whole concept behind it.
And that's a good mindset to have, man. And I think that's what kind of scare people away because you will have some brokers, they just get straight to the numbers and money, and it kind of scare people off.
It does.
You know, it's not that people don't want to spend money, but when you just coming off, first thing you just money.
We
money.
call it commission breath in the industry.
Oh,
it's
wow.
called commission breath.
Yeah,
Because we're 1099, we get paid off a commission only.
Got it.
You understand? So when some clients, they can sense you just all about the money.
Money, right.
Yeah, it's over the phone. They see you, or you do a Zoom call or not. They sense that, nah, I'm good. They get I'm good. I don't want to do business with you. I'm good. And they just move on about their business. So yeah. So if you're not taking your time with people, and I think I explained the story to you earlier yesterday. So you have to take your time with the clients, especially with IUL. A term and a whole life is simple. You, hey, how much coverage you want? All right, how much is it gonna cost? Boom. It's a simple sale.
Yeah.
You understand? IULs is a little bit more intricate. You got to get to the details. You got to be detail oriented when it comes to this.
Gotcha. Yeah. And so, what's the name of the company you work for?
Financially Fluent. We're out of Tampa, Florida. That's where our office is.
And how can they reach you?
How they can reach me? Honestly, y'all can call me. 573-587-2693. And also, I think you can reach me on, I can't remember my actual my Instagram. Policy
Insight, right?
No.
Okay.
Policy Lump Agent or Policy Agent Lump, I believe. Okay. One of those. So yeah.
Right.
You'll leave it in the description and the details.
I'll have it all in the description details for the audience that watch, man.
Correct.
Go ahead, Jay.
I got one more question.
Go ahead, man. Ask him all the
questions.
Let's
go,
man. So let's say I have was it whole life already, a term.
I have term, okay.
Already, right? And I want to get an IUL. Can I move that over, or is that separate?
You can't move it over because, as I mentioned earlier, its term doesn't have any cash value that builds.
Because it expires.
It's about. So you're just paying money into it. Now, if you have a traditional hold, you can possibly do an exchange or use that money. If you have money into it, we basically call it 1035 exchange. In most cases, you could basically turn that money, get that money and basically turn it over, or you can cash it out if you have money into it and put it into your IUL. So term policies don't have cash value. It doesn't build. So you can't use that money to basically use for an IUL.
Okay. And then another question, right? Do you think it's wise to have different policies, or do it make sense to just get one policy? Or how you feel about that?
I know where you're going, but go ahead.
Yeah. So as I mentioned, I have a term and I have IUL. Okay. You understand?
Yeah.
So I got it because guess what?
Yeah.
That's what I can afford. I'm only paying $70 a month for it. It's cool. I need it. If anything happens, guess what? The family taken care of. They can pay bills, pay the house off, whatever. But if I can afford to have a term and an IUL whole life, why not?
Right.
You understand?
Okay.
You can change your price. You can kind of your month. You can do whatever you want. So I would suggest, but guess what? Because the term is going to what? Expire. You understand? So why not have a term, have a whole, or get you, let's just say your house is worth $200,000. Get a $200,000 term policy and get a whole life. You understand? Because that's your expensive asset that you have.
Yeah.
Well, assets liability.
Liability.
So whoever you're talking to, however you look at that. So so you get a term and a whole life at the same time. I highly suggest that if you can stomach it, meaning if you can pay that on a monthly basis. But if you can't, you get a term or you get a small whole life. But I suggest you get a whole life, and guess what? You get a traditional whole. Let's say it's $50,000 over time. You're gonna be overpaying. You basically already spent $50,000 paying on a monthly basis. So it makes sense all through and through to have an IUL because the cash value is building over time. You understand? So that's the kind of main component when it comes to that.
So these insurance policies you hear football players and basketball players getting, is this the same insurance?
It's the same concept, right?
Okay.
It's the same type of concept because basically what it is and I talked to a lot of football players and I go to different seminars and I run into them and we're having these conversations. They all hear about pensions, right? When it comes to the NFL, hey, I got my pensions. I do my 4 years and I get money out. They put up a large lump sum up front and then over time you basically get that money. So for example, I have a grandmother, she has a 5 grandkids. She said, hey, I only want to pay for 20 years. I said, oh, okay, cool. She's only paying $50 a month. The kids are young. So she's paying $50 a month for 20 years. That after those 20 years, that money's still going to continue. So that's when you say, when you're invested 4 years, they're putting so much money into it, they're vested after 5 years because it takes a lot of money to do so. So in essence, it's the same kind of concept. It's the same. They just call it or naming it different things.
Gotcha.
It's the same type of concept.
Yeah.
You understand? So yes, correct. It's the same thing.
Oh, okay.
Same exact thing. They're just being smart about their money because guess what? They can go through it real quick, but they want to make sure they have money on the back end. So yeah,
Okay.
correct.
So before we end the segment, man, what advice would you like to share with the people that's still on the fence? I know you dropped a few pointers. What is the advice you would say to folks, man, that's just on the fence with getting insurance, and why is it important? So that they don't leave that burden on their family.
Honestly, educate yourself, right?
Yeah.
So if you get somebody approaching you, let's have an open ear, right? I talked to somebody at the picnic earlier the other day, and her ear wasn't open. I said, ma'am, I'm not asking for no money. I just want you to hear me out. Yeah. And she eventually opened up and said, hey, listen, you know what? It's a bad time. I want you to call me back. And I thank you for being passionate about this. I do want to hear what you have to say. Because she has a 401k. And guess what? Her money was going up and down. She didn't have an actual compass on where her money was going or where her retirement is going to be. And I would ask the question, one, are you serious about your retirement? That's the first question I would ask you. If you're not serious about your retirement, don't worry about an IUL. Don't worry about talking to me. But if you're serious, let's have the conversation so I can educate you first, right? I don't care if you don't do nothing. You could walk away. You have the information. You be like, hey, that brother just educated me. I understand what's going on now. I know where my money is going. I know where to look now. But get the education first, right? And see where your situation is, right?
Yeah.
Get the education, talk to somebody, and then say to yourself, you know what? Do I care about my future or I don't? I would say that, and then basically to get you a plan set in place and basically live off that, basically, that IUL.
Wow.
Now, we do IUL, we do other things now, but IUL is kind of the main thing. We do annuities, we do all type of other things as well, but that's the main thing, is basically
It's the
IUL.
umbrella.
There you go. That's the umbrella, that foundation, as you was mentioning. That foundation, correct.
Right. Wow, man. I want to thank you, my brother. Brother Anthony, man, Lumpkin, I want to thank you for coming on the show, my brother. You're very knowledgeable, man. May God continue to bless you with the great things that you're doing, man.
Yes.
I'm rooting for you. Everyone else is, North Miami Beach is rooting for you, man.
What about North Miami?
North Miami too. Yeah. You know, we went, of course.
Okay, here's the thing, guys. I can say this.
Explain it.
All right, so basically, we went to play Optimus football at Sun Devils. We had a coach name. His coach name is Coach Dunn. At that moment, he was a North Miami high school coach at the moment. So we went JFK, all that kind of stuff. And then me and Arlen happened to go to the other school. We went to North Miami Beach with our boys and everybody else, but we just went to North Miami. But thing is, we still know everybody from North Miami Beach, but it's all love and it's all family. So that's what it is.
Right. So it's a Charge of Pioneer thing, man.
It is.
It ain't no beef,
for sure.
man. We all family at the
We
end
all
of the day,
family.
man.
We all family. Yes,
Right. So, man, I'm glad, bro, you tapped in with me,
Yes,
man.
sir.
And the audience, I want you guys to tap in with Anthony Lumpkin. Tell them what's your social media so that they could go ahead and tap in with you again.
Again, I'm gonna do the number 573-587-2693. Text me if you want some information. You could just say IUL, heard the podcast, and basically I'll know who you are. Because if you call, I get tons of calls, and I'm always on the phone. And then the actual Instagram, please forgive me if I don't remember it. I'm saying it wrong.
It'll be in the description.
It'll be in the description. Policy Agent Lump. Okay, and then shout out to my financially Fluent family in Tampa and all over the world.
That's for sure, man. And guys, I see you guys been watching the episodes, man. I thank you for that. I thank you for the continued support. Also, guys, hit the like button, drop your comments, subscribe. If you have any topic that you would like me to discuss, just drop it in the comments. If there's a special guest you would like me to bring on the show, drop it in the comments, man. Also, again, I want to thank you guys for tapping in with Talks with AJ podcast. Peace.